So I wanted to start with the S&P real quick, just talk a little bit about where the stock market is as we open up here this week. Um, so the stock market had a bit of a slip to the downside recently. And I talked about this in my video that I put out on Sunday. Basically, that we put in this low, and now we put in a bit of a higher low, and now we've broken out of resistance, and bulls seem to be doing okay here. On Friday, you had a little bit of an indecisive candle on the S&P 500, but today we've started to already fill that wick to the high side. Right now, I would say bulls look like they are in control, but there is a contention point coming up pretty soon for the S&P. I'd call it that 5140 to 5150 area here on the SPX 500. What we can see is we had past support that turned into resistance on the way down. We are now retesting that area. And the question is, are the bulls going to be able to bust through this level and go higher? Guys, I've had some changes to my own positions. I am now long the technology sector through the ETF XLK. I went long on this one. Well, I actually got assigned on my my puts that I sold. I got assigned. Now, the cool thing is that I got assigned right around the time that the market then decided to rip. So nice little position for me. I cannot complain about being up $2,000 pretty quick like that. But I'll talk more about that as maybe an easier way to analyze this is to take a look at the NASDAQ. So the XLK has very, very high correlation to just the Qs or the NASDAQ. And that's because, of course, the technology sector or the NASDAQ is comprised heavily of tech names that we all know and love. And so what we see here is that similar to the S&P 500, the NASDAQ also has a big test this week. And I'm very, very curious to see how price action reacts here. You got a nice push going into the market open here this week here. 930 just hit. So we are watching the stock market open up as we speak. The question will be today, are you going to get a candle that can break through this level? Or do you see rejection off of this structure? I mean, this is really key stuff here because this was what really got us started to the downside. I think, and Frank and I were talking about this week, you are probably going to get some very decisive price action. You just have so many different things to look out for. On Wednesday, you have FOMC. Obviously going to be a big market mover for everything, whether it be gold, indices, the dollar, etc. On Friday, you get jobs, right? So you got jobs this week, you got FOMC this week. And on Tuesday, I believe you have earnings for many of the tech names. I believe we have Apple and Amazon this week. I know that Amazon will be happening Tuesday after the bell. So really interesting stuff here this week as we get started. There's a lot to watch out for. How am I positioned going into this week? Well, the best way to talk about that is to maybe just show you guys my current positioning. So let's go over to the account. This is my real account, P&L, no nonsense. You guys know if you watch my live streams, one thing that I talk about frequently is my own current positioning, my own, portfolio, my own trading account. So I've got a couple different things here. I mentioned that I just got assigned XLK shares, and I'm very happy about that. I mean, the market ripping here this morning, don't mind that at all. I got assigned, so I collected premium on this. My average share price is $198.90. This is the technology sector, so similar to the Qs. I sold puts on SMH. That's also doing quite well. Another tech-heavy kind of area of the market that is semiconductors. So I sold puts on semiconductors, and semiconductors ripped last week, so that play might be working out well. Also,
our Edgefinder anniversary sale is almost over. If you want 40% off the Edgefinder, the absolute best deal of the year, don't wait and head on over to a1trading.com to chat with one of our representatives live right now. This is the biggest discount of the year, and we have so many new features to share with you, like our Smart Money Indicator that directly compares COT data and retail data against each other, or our brand new data scanners with even more useful information and accurate scoring than ever before. more. Now is the perfect time to get this powerful trading tool because the 40% discount won't last forever. Celebrate the Edgefinder anniversary by grabbing yourself a copy today on our website, a1trading.com.
I have an S&P position that I've also sold calls against. That one's doing very, very well. I have a silver long position that is also going well. Now let's get to the things that aren't going so well. On the TAN side of things, well, I've actually I've really come back on the TAN position. TAN, this is solar panel ETF or solar company ETF. It basically has a bunch of companies like First Solar, Enphase. You've got all sorts of companies that specialize in solar technology. So I sold puts on that. I got assigned and I'm in the position. So got some mixed P&L there. And my worst performer is TLT. This is going to be a bond ETF. So this is 20-year plus year duration bonds that I own a position in. And this has gone terribly for me. So I've sold puts on this one. I got assigned, and then the market continued to tank lower. So with yields, let's have a look at yields and what they're doing here to the day to like the dollar, etc. If yields come down, that would be great for my TLT position and most of my technology positioning. I would love to see yields come down. That would indicate that Fed may cut rates, but I also am not basing my whole trading account or my own positioning based on we need to see rate cuts this year. I'm trying to avoid doing that, even though it would be good for a lot of the growth sides of the market. Again, I am looking primarily for stuff that is not incredibly sensitive to interest rates, which I know sounds a little bit silly considering I just talked about solar panels, bonds, growth ETFs, and obviously those areas have struggled a little bit more. Anyways, let's talk about gold here for a second. Gold seems to be finding a low point here. Here's gold on the 4-hour chart. You can see, let's go ahead and just take out this. This is really what we're looking at. We are chopping between two key areas. You have resistance around the 2,400 level. You have support around the 2,300 level. I'm watching to see if gold makes a decisive move one way or the other. Another area that's interesting, oil off of its lows, but not really moving too decisively either. Let's have a look at the edge finder. Oh, that's my email. You don't want to see my email. Let's go to my to the edge finder and let's talk a little bit about top setups here today. Sorry, where was I? I was talking about the silver market. I am still bullish on this. I still have a positioning on this one, or a long position on silver. We'll talk about that in just a second. Outside of that, let's take a look at other things. You got copper up here, silver, the Australian dollar against the Kiwi, dollar CAD, dollar yen. Did you guys see dollar yen? We got to talk about dollar yen for sure. The Bank of Japan has threatened yet again, or potentially there's a lot of traders, investors who are thinking that the Bank of Japan may intervene, which if you take a look at dollar yen on a price action perspective, my goodness, guys, did you see this move? This was a drop from peak here to the bottom. That is 567. Oh, that was James hitting a sound effect. Okay. I was confused by that. I was like, oh, there it is. See, we got sound effects behind me. That's awesome. So dollar yen, big pop, big drop. And one of the things here about the dollar yen, the story, I guess, behind this is that the Bank of Japan, and this has been an ongoing theme for years now, really, is the Bank of Japan threatens intervention or talks about it. And I haven't looked at the specifics, but I believe from the headline that I saw that there's just rumors of intervention. I don't believe we've gotten a formal declaration of intervention from the Bank of Japan, but the rumor itself is enough to make the market think, oh, they're going to start dumping dollars, buying yen, supporting their currency. But we've heard this so many times. The last time it happened, it happened, it's happened several times. The last time there was a real intervention from the Bank of Japan, it did act to push the dollar yen exchange rate down for some time. We saw that back over here. Intervention from the Bank of Japan can have lasting effects. It's not always just a threat or always just a rumor. But what you have to understand is, the dollar is strong whether the Bank of Japan is intervening or not. In my opinion, the dollar looks really strong. And so for me, If this does give you a pullback, I am likely a buyer when it comes to the dollar yen. So I'm watching this one. I'm keeping an eye on it. I believe it's still neutral. Yeah, it's neutral on the edge finder here. But if we get something going here, we have jobs data this week. If you get something that crosses into stronger, economic data territory, if retail sales really beat out what Japan's putting up, we could see some interesting buy signals. But for me right now, dollar yen technically is still in the neutral camp here for me. So just waiting on that to see if I can find something. Let's take a look at silver also. I mentioned that I am long silver. So I have a position. It has done pretty much nothing. It's gone nowhere. It's really, really just been kind of a sideways mover for me the last several trading days. I'll pull up my SLV position. So yeah, I mean, we're floating $77. So it's not really moving anywhere. 77 bucks, we'll take it, silver itself will be likely very volatile this week because you have, again, a lot of economic data. The Fed will speak on Wednesday, and jobs data will come out Friday. So has the potential to be a really strong data. A lot of stuff could be coming out this week that could really move the markets. Let's take a look at the dollar really quick. So the dollar index, what I like about the dollar here, if I take a look at major currencies, we are still seeing, for the most part, a lot of dollar favoritism, and euro dollar is getting a very bearish reading. In fact, I think, well, I do have a position on the euro, but I'm curious how that's going here today. Flat on the day, but I am short euro USD. I'm just slightly in the red on this trade right now. But if the market rolls over, if data this week comes out strong or the Fed comes out hawkish, euro dollar might be a nice play. Alternatively, if they come out more dovish than expected, probably a stop out, right? So my thought though is that, when you look at the synopsis of the data here, right? When you look at all the economic data and most of it just coming out very, very strong out of the US, my thought process is, I don't think the Fed is going to get aggressive with rate cuts anytime soon. Now, the reason for that is you can look to a lot of different things. People are employed, right? Employment data by itself is one of the big factors as to why the dollars is getting such a strong reading on the edge finder right now. It's because employment data relative to its European peers and Pacific peers, the U.S. economic or the U.S. labor market looks really strong. And so that's giving preference to the dollar. At the same time, inflation is sticky in the US. So I just don't see right now a very solid positioning for, wanting to get really bearish on the dollar. So when I look at the US dollar index, what I'm thinking for this week is if you do get dips, I'm probably a buyer around 105. And if you see breakouts, right? That's where I just let a winner run because I'm already in euro, but I'm flat on the trade. So we'll see what happens this week. But again, I lean towards, I think the Fed will stay more hawkish than what people think. This is my point with why I'm not long gold right now. All of the stuff that I just said bodes pretty bearish for gold. Because let's reiterate what I mentioned. Higher for longer means rate cuts might not be coming as soon as people thought, but the economy is still relatively strong. That's what's stopping the rate cuts is people are employed. The consumer is relatively hanging in there. Despite what everybody, obviously the grocery store is a shell shock for all of us, but people are still employed. People are still paying their bills. People are still buying stuff. They're still traveling. As long as that is going on, rate cuts are going to be hard to find. And if rate cuts are hard to find, what that tells me is, okay, gold up in these areas is just not as attractive as it was over here. That's my opinion.
I cannot buy that.
I cannot buy that. Exactly. There's a quote from our friend Tom from Simply Forex. So gold coming down here and retesting this area, I think that this is also a very normal correction, a normal pullback. Now, what could get you what could get me excited about gold longs again would be as if you saw the ECO, the economy, start to cool off a little bit. At the same time, if inflation, which has been a sticky problem, if it stays problematic, this is the stagflation argument that we don't currently have. Right now, this is why I'm not outright bullish on gold right now, is because right now what you see instead is you see the economy actually doing pretty well against our traditional metrics. Jobs, people are employed, inflation is remaining hot, arguably because people are employed and because people are spending money. And inflation is also sticky. So this environment is not necessarily outright bullish for gold, because what this tells you is that the Fed has a back pocket play where they can actually rate hike if the economy is really strong. So the picture for gold is just not as bullish for me. I have to really remain patient. And you guys know me, I love to buy gold. It is one of my favorite plays, just to be long gold, find opportunities to buy gold. But I'm not a perma bull, I'm a trader, right? So as a trader, I have to be willing to acknowledge there are times where I'm sitting in and there's times where I'm sitting out on a market like gold. So I'll wait for a signal when it comes to the metals. On gold right now, we are just getting a very neutral reading, and most of the red in this chart is coming from strong economic data, as I mentioned. In the Edgefinder scoring algorithm, guys, the economic data being strong for the US is considered a bearish signal for gold, and the economic data being weak for the US is a bullish signal for gold. That is how we've calculated the scoring system for the Edgefinder. All right, so yields. Let's talk yields for a second. Are yields going to come down? Well, what do you need for yields to come down, and why does this matter? Well, if you trade gold, you should have this watch list. This should be on your watch list, 110%. If you trade gold and you do not have US 10Y on your watch list, add it. I'm telling you, it's worth it, because what this is the bond yield offered on US government bonds. Okay. And this number goes up when the bond market thinks that inflation will remain sticky and or the economic outlook is positive. When the economy is really positive, what people tend to do is they say, okay, I have options. You know, think of people building their they have options in their 401k. Let's say, 401k people park money in their 401k, or they stuff money in an investment account. This is the majority of normal people, not people who stare at charts like us all day long. They have a couple options, right? They can go into something like stocks, or they can go into something like bonds. And I've made this point many times, but when the economy is really good, right? Where do you think people go? They don't really go into bonds. They go into stocks because companies are doing well. It feels right to buy companies when the economy is doing well because earnings are going to grow and people feel they're going to get a good return. But if the economy is bad, they flip the script and they say, no, stocks are doing terrible. Companies are performing poorly. Let's go into safety. Let's go into bonds and just collect basically guaranteed risk-free money. That's the idea behind treasury bonds out of the United States. Now, there is risk involved with anything and everything in the markets. And the idea that there's no risk in bonds is foolish, but it's what people think. They think, oh, just go into bonds, that's safer. So the point that I'm trying to get at, though, is that when the economy is doing really well, people typically do the first thing. They don't buy bonds, they buy stocks. And again, right now we are in that environment. So what we see yields continue to creep up and up and up. And the reason for this is because the bond market is an auction house. They're auctioning off debt from the US government. And people are saying right now, nah, 4% is not going to do it. We need 4.6. And if that keeps going up, what that usually signals is that, again, inflation is expected to be sticky, that the economy is doing well, but inflation's sticky. And what that can lead to? That can lead to eventually stock earnings becoming really unattractive. And people say, oh, nope. And they rush back into bonds. This is a fascinating thing. And if you're somebody who's watching gold and you're like, well, what does this have to do with me? Absolutely everything. Because gold trades very closely to what this is doing. if this is rising, this is not a very good time and an example to do this right now, because it's not gonna be perfect. But most of the time when this is rising dramatically, people get away from gold because they say, the economy's looking really good, inflation is sticky, and with those two combinations, the Fed can just raise rates, and all of those scenarios are poor for gold. Now, if this thing were to drop dramatically, it can lead to some really great performance in gold because people are flooding into safe havens, and that would be gold, and TLT is another one, right? Bonds in general. So think about this when you're looking at this. Also, the dollar index trades very closely to the yields market as well. If this is rising, typically, not always, but most of the time, the dollar index is also rising as well, because again, this is the confidence level in the US economy. If this is looking really strong, then people say, yeah, I want dollars, right? The dollar is so much more stable than other currencies. Give me the dollar. This is what people are thinking when yields are on the rise. Okay. So right now we've seen yields on the rise. And so people are very excited about, the strength of the US economy. So they're seeing this thing go up. But the longer this does go up, again, it poses a threat at some point to stocks, because at some point, the risk to going into stocks is not worth just this risk-free 4.6%. Think about this, guys. And a lot of people have been pointing out this, and I'll be talking in just a moment to Chris Pulver, and we've had this conversation together a couple of times. Maybe we'll ask him about it in a moment. If the bond market, if this continues and we go up to 5%, you got to start thinking that psychologically, people are going to start saying 5% risk-free. And when I say people, I'm not talking about just people like you and I off the street. I'm talking about like pension funds, people who manage tremendous amounts of money. They start looking at that and they say a 5 handle on a 10-year government bond that's risk-free 5%. That's not bad, right? And you got to think there's also tax benefits there. So there's a huge incentive at 5% for people to go into bonds. So where I see some trouble for the stock market would be if you continue to see this thing move up. That's where you get inflation concerns continuing. You get people going into, looking a little bit differently at bonds as an option. Again, you got to think bonds might not be very attractive when they're offering 3.8 to big money managers, but at 5%, you got to take them seriously. So these are things to really think about.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.